Good morning, traders. Today is the 8th of November. My name is Neville Hornsey, market after YouTrading, and today I'll be looking at a week ahead. So as always, I like to basically look at the Forex heat map on YouTrading.com. And you can see here, the bottom left-hand corner is green, top right-hand corner is red. So that's a risk on day today. For me anyway, like the start of the London session. We're going to see moves into the equities, we can see moving to the commodities. Hopefully see a move out of the US dollar, and then you can see like move out of the yen and the Swiss franc. So risk on day, good for equities, good for risk assets. This week is going to be dominated by central bankers, so it's going to be quite frustrating waiting for them to explain what they did last week. You know, the Fed tapered, the Bank of England basically disappointed with not raising their rates. So today we've got Fed Chair Powell. He'll be trying to unpack the wording that was in the statement. We can try to unpack that so we can see which way the US dollar is going to react. We've also got Bank of England, Governor Bailey today. He'll be trying to tell the markets that they are prepared to raise rates, but the markets just don't believe them at the moment. So we're going to talk about that, and then we'll have other FOMC talking heads throughout the day. So Monday is going to be a bit of a frustrating slow day. The more I go through this calendar, the more you're going to hear that there's going to be another central banker or some sort of monetary policy committee member talking about what they were thinking and talking about last week and the week before. Look to the US dollar index here. It's in a rising uptrend. It's found resistance at $94.50. Spiked through Friday, took out some liquidity, and is currently today trading in that sort of Friday range. Can't get bearish until we see like a break of the swing low here on the 28th of October, or through this cloud. Bank of England, but Governor Bailey talking. They destroyed the pound last week. You see this big red candle here. Go to 4-hourly, sort of zoom in a little bit, right down into this demand zone, to this last candle on the 4-hour chart on the 29th of September 2021. These guys were the last of the sellers before this big rally up, which means there was a lot of buyers there. Obviously overpowered those sellers. The buyers are still there essentially. So if Bank of England Governor Bailey comes out today and says they are going to be raising rates, like quite explicitly, forward guidance had said that the Bank of England were going to raise rates, and then unfortunately they didn't. So this is where we've got this big red candle. But if the market starts to believe that they are going to raise rates, then this is going to go all the way back up. If we look to the active trade sentiment indicator, 74% of the traders on this platform are bullish. So that's why I'm not saying this is going to go a lot higher. At the moment, retail traders think it is going to go higher. They've seen it bounce off this demand zone. We might touch the 1.36, like I said, because that was a significant level in the past, and we could reverse, because now we've getting quite close to a double bottom down here. Tuesday, ZEW, ECB Lagarde, lots of euro sort of centric data coming out. So euro versus US dollar, obviously a major part of the US dollar index. Broke through some serious support here. We've gone back up to test that swing low at the 29th of October, so a month later, and now we're kind of making a bear flag. So if ECB continued to be sort of dovish, even bearish, the actual European economy, then we could see a lower euro. But obviously, if I'm talking about the US dollar possibly coming down, then we should see at least a relief rally, if you like, in the euro. Can't really get bullish until we make higher highs and higher lows. So getting above the 1.67 would be the start of that process. But at the moment, could be a bear flag. Not going to trade it. And especially if we're waiting for central bankers, especially heads of central banks like ECB Lagarde on Tuesday, I'm not going to touch the euro pairs until after that. If anything happens in the morning with ECB Lagarde, then it could all be undone by Fed Chair Powell. Governor Bailey talked again on Tuesday. So once again, anything that happens in the British pound today could be undone tomorrow. For me, I trade like the NASDAQ and things like that. And I'm aware that on Tuesday, 6 p.m. my time, there's going to be a bond auction, and that has affected the trading in the NASDAQ over the last few months. If we look to the TLT, this is the 20-year ETF that follows the bonds. The long-term bond, you can see since the FOMC meeting, bonds have gone higher. And if I just go to trading view. In the blue and orange, we've got the NASDAQ US 100. And in the red and green, we've got the US 10-year yields. So as bonds go higher, yields go lower. I just wanted to point out that on certain big green days on the bond yield, so these sort of days, you can get really big moves in the NASDAQ. So when bond yields are moving and bonds are moving, then the NASDAQ can also, and obviously a lot of the other risk assets can be moving as well. So 6 p.m. Tuesday, it's going to be a big day. I'm not going to trade until that all happens. Wednesday, US CPI, inflation's rising, real yields are going negative because, like I said, the US 10-year notes going higher, yields are coming lower, but inflation's going higher. So in real terms, your yield might be 1.5% on the chart, but if you include inflation, then it's gone negative. So US CPI is a favorite for retail traders and hedge funds to trade. So again, be careful of that. Wednesday, 6 p.m. my time, we've also got 30-year bond auction. So this TLT will be affected. And what I was going to say was, like, the US dollar versus the yen has been sort of tracking the yields as well. So if the yields are going higher, US dollar versus the yen goes higher, well, it has been going higher. And as the yields come down and the notes and the bonds go up, then this dollar yen can come down as well. So if these yields keep coming down, there is a chance that the US dollar versus the yen come down a little bit as well, just to find value, if nothing else. Thursday, Australian employment data comes out. Like I said, today, it's good for the commodities at the moment. London open. Australian dollar, like the US dollar, like the pound, like the euro. The central banks for each of those currencies are now pivoting away from talking about inflation. Yet they've accepted that there's high inflation. Now they need to try and get maximum employment. So lots of job data in the next couple of days, weeks. It's going to influence how the central banks think about raising rates and tapering and things like that. So jobs data becomes more important now. The talk is definitely moving from inflation towards jobs data. We're at 50 at the 50 EMA. We're below the 20, unfortunately, but the 20 is above the 50. So short-term momentum is still relatively strong. We're underneath the 200, so long-term, because it's been going sideways. So if we can get back above 20, back above the 200, get back above this balance area, and basically tag the 0.748 to 752, then we've got a good chance of accelerating through this swing high 29th of October. The GDP data on Thursday is going to be quite important for the pound, obviously, but we're also talking about Brexit again. Article 16 could be triggered for the Northern Ireland Protocol, which then gives us a no deal. So this pound could just get destroyed. Who knows what they're going to do? It might all be priced in. Maybe that was part of the reason we had a big move down, with Brexit being talked about, with the Bank of England obviously not being confident enough to raise rates whilst Brexit's going on. Maybe that's what they're thinking. Traders are going to be a bit sort of sketchy. So if we do get an Article 16 decision this week, then that's going to be big for the pound. So watch the pound and the euro pound news for that. Friday, we've got more US jobs. We've got the jobs opening, JOLTS reports. We've got the University of Michigan Consumer Sentiment. So we've got the University of Michigan Consumer Sentiment. And then we've also got another FOMC policy maker talking. So Friday is going to be a bit US session centric. So after all that data, especially after the Michigan sentiment data's come out, then the markets might close depending on what that comes out as. It's going to be a bit of a frustrating week. There are some things to look out for, like US CPI and the bond auction for me personally, US PPI maybe, and ZEW. So Tuesday might be an easier day to trade. There's less of the talking heads. But we've also got things like Elon Musk. He's tweeted out much has been made lately of unrealized gains being a means of tax avoidance. So he proposes selling 10% of his Tesla stock, and he'll do whatever this poll says. So everyone's watching this poll to see if he's going to sell 10% of his massive fortune. Currently, it's looking like the poll is suggesting that he will. You might get a bit of front running on the Tesla stock today when a major shareholder sells that much stock, generally retail traders follow suit. At 1.2 trillion and above, Tesla is got a larger market cap than the top 5, maybe top 10 energy companies in the US in terms of like the oil producers. So anyone that sells stock today because of this whole, might get a chance to buy in a little bit lower. But I think the general consensus is that no one else is going to be selling any stock, and they're in it for the long term. So if you do get a chance to buy the dip on Tesla, then good luck with that. I mean, this is a weekly chart. When something goes this parabolic, you've got things like Bitcoin, many sort of pump and dumps. This is different from a pump and dump because it's disrupting the whole complex of energy and the way we're moving into like electronic vehicles. Could be a bit of a pullback. If we get a pullback to $900, that'd be, this swing high here. That'd be an amazing chance to get back in. As long as we stay above this balance area, above this cloud, above this swing low, then this looks positive. So there might be a chance to get in. That's basically what I'm saying. There's going to be a lot of headline tweets coming out. The algos will react to that. You might get stopped out. So just go careful. Maybe trade smaller if you can. Reduce your size or wait for really good entries. Your A++ entries. Then that's probably the way forward. Right. Good luck.